Classical Accountancy Numerical Problem Solutions, presented by eduxit.com. In this video, we are going to provide Accounting for Partnership Basic Concepts, Guarantee of Profit to the Partners Solutions, Problem 31 Solution. The problem statement is as follows. Radha, Mary and Fatima are partners, sharing profits in the ratio of 5:4:1. Fatima is given a guarantee that her share of profit in any year will not be less than 5,000 rupees. The profits for the year ending March 31st, 2000 XA amounted to 35,000 rupees. Shortfall, if any, in the profits guaranteed to Fatima is to be borne by Radha and Mary in the ratio of 3:2. Record necessary journal entry to show distribution of profit among the partners. So, as per the problem, we have to record the necessary journal entries showing the distribution of profits. As we are dealing with the distribution of profits, it makes sense to prepare the profit and loss appropriation account also. If we carefully analyze the problem, we notice that this problem is just about the distribution of the profits, nothing else. It's given in the problem that the net profit for the year is amounted to 35,000 rupees. Now, we know that the net profit is nothing but a credit balance in the profit and loss account. For distributing this net profit, we prepare the profit and loss appropriation account. So, we need to transfer this net profit on the credit side of the profit and loss appropriation account. Also, as we are transferring this net profit from the profit and loss account, we need to debit the profit and loss account. Now, the preparation of the profit and loss account is not in the scope of this problem. So, let's leave out the profit and loss account related debit entry and let's directly post the profit and loss appropriation account related credit entry into the profit and loss appropriation account. But first, let's prepare the format of the profit and loss appropriation account as it is not yet prepared. Let's first write the title as profit and loss appropriation account. Let's then write the headers DR and CR to designate the debit and credit sides respectively. Let's now have the individual columns for particulars and amount in rupees on the debit side. Let's have the same columns on the credit side also. Let's then write by profit and loss account into the particulars column on the credit side. This indicates that the net profit is transferred from the profit and loss account to the profit and loss appropriation account. Let's then write the transferred net profit amount of 35,000 rupees into the amount column. With that, we have completed the credit entry related to the transfer of the net profit amount from the profit and loss account into the profit and loss appropriation account. Now, as we have already discussed, this problem is totally about distributing the net profit to the partners. So, there will not be any other entry in the profit and loss appropriation account and we can directly jump to the distribution of the net profit among the partners. Also, it is given in the problem that the partners share their profit in the ratio 5:4:1. Let us now calculate the share of the net profit for each partner as per this ratio. Before we proceed with this calculation, there is one thing worth noticing here. It is given that the partner Fatima is given a guarantee that her share of profit would not be less than 5,000 rupees. It can be more than 5,000 rupees, but it should not be less than 5,000 rupees. And if there is any deficiency, it would be borne by the other two partners, Radha and Mary, in the ratio 3:2. So, in the working notes section, let us first write the header profit sharing to indicate that the upcoming calculation is related to the sharing of profits among the partners. Now, let us also have the subheader to calculate the profit as per the profit sharing ratio. Now, the profit share of the partner Radha is equal to the total net profit amount of 35,000 rupees multiplied with her profit sharing ratio 5/10. Let's cancel the 0 in 10 for a 0 in 35,000 rupees. Now, if we multiply the remaining 3,500 rupees and 5, we get 17,500 rupees. This is the share of profit for the partner Radha. Now, the profit share of the partner Mary is equal to the total net profit amount of 35,000 rupees multiplied with her profit sharing ratio 4/10. Let's cancel the 0 in 10 for a 0 in 35,000 rupees. Now, if we multiply the remaining 3,500 rupees and 4, we get 14,000 rupees. This is the share of profit for the partner Mary. Now the profit share of the partner Fatima is equal to the total net profit amount of 35,000 rupees multiplied with her profit sharing ratio 1 upon 10. Let's cancel the 0 in 10 for a 0 in 35,000 rupees. The resulting value of this calculation is 3,500 rupees. This is the share of profit for the partner Fatima. But it is given in the problem that the partner Fatima should get a guaranteed profit amount of 5,000 rupees. But as per the profit sharing ratio, we are getting her share of profit as 3,500 rupees. Now this 3,500 rupees is less than 5,000 rupees, right? So we need to find the difference and adjust it from the share of profit of other partners. In other words, we'll reduce the other partner's share of profit and adjust that amount to Fatima's share of profit so that Fatima would get the guaranteed profit amount of 5,000 rupees. By the way, we call this difference in the profit share amount as deficiency. So the deficiency of Fatima's profit share is her guaranteed profit amount of 5,000 rupees minus her calculated profit share as per the profit sharing ratio, which is 3,500 rupees. Subtracting, we get 1,500 rupees. So this deficiency should be adjusted from other partners' profit amount. Also, it is given in the problem that this deficiency should be borne by the other two partners, Radha and Mary, in the ratio 3:2. Now, the contribution made by the partner Radha is equal to the deficiency amount of 1,500 rupees multiplied with her deficiency sharing ratio 3 upon 5. Now, cancelling with 5, 5 ones are 5 300s are. Now, if we multiply the remaining 300s and 3, we get 900 rupees. This is the contribution by the partner Radha to the deficiency in the partner Fatima's profit amount. Now, the contribution made by the partner Mary is equal to the deficiency amount of 1,500 rupees multiplied with her deficiency sharing ratio 2 upon 5. Now, cancelling with 5, 5 ones are 5 300s are. Now, if we multiply the remaining 300s and 2, we get 600 rupees. This is the contribution by the partner Mary to the deficiency in the partner Fatima's profit amount. Considering these contributions, let us now find how much is the actual profit share of each of the partners. Now, the actual profit share of the partner Radha is equal to her share of profit as per the profit sharing ratio, which is 17,500 rupees, minus her contribution to the deficiency in partner Fatima's profit share, which is equal to 900 rupees. Subtracting, we get 16,600 rupees. Now, the actual profit share of the partner Mary is equal to her share of profit as per the profit sharing ratio, which is 14,000 rupees, minus her contribution to the deficiency in partner Fatima's profit share, which is equal to 600 rupees. Subtracting, we get 13,400 rupees. And finally, the share of profit of the partner Fatima will be equal to her guaranteed profit amount of 5,000 rupees. Now, for distributing the profit, we transfer the profit amount from the profit and loss appropriation account to the partner's capital account for each partner individually. In other words, there is a decrease in the profit amount available in the profit and loss appropriation account. So, we should debit the profit and loss appropriation account. At the same time, as we are adding this profit share to each partner's capital account, the partner's capitals are increasing. So, we should create the partner's capital account for each partner. Now, as it is asked in the problem, we have to prepare the journal entries to show the distribution of profits. See, there are two ways in which we can record these transactions in the journal. In the first method, we record the entire transaction as a single compound entry. In other words, we record the actual profit share of each of the partners. So, let us have the journal format to journalize these transactions. Let's write profit and loss appropriation account as the debit entry. Let us also write the text DR to indicate that this is a debit entry. Let us then write the debit amount of 35,000 rupees in the debit amount column. Leaving a margin, let us record the credit entry for the partner Radha's capital account. If you remember, the credit entries in the journal start with 2. Let us then record the corresponding credit amount of 16,600 rupees for the partner Radha. Let us then write to Mary's capital account to show the credit entry for the partner Mary. Let us then record the corresponding credit amount of 13,400 rupees in the credit amount column. Let us then write to Fatima's capital account to show the credit entry for the partner Fatima. Let us then record the corresponding credit amount of 5000 rupees in the credit amount column. Let us then write the description or narration of this transaction as being profit distributed among the partners. With that, we have completed the generalizing of a single compound entry for the distribution of the profits. Now, there is a second way of recording this transaction related to the distribution of profits. Here, we first record the transfer of the net profit for each partner as per their profit sharing ratio. In this case also, we should debit the profit and loss appropriation account and create the partner's capital account for each partner. So, let's first write the heading to indicate that we are going to record separate entries for share of profit and deficiency separately. Let's then have the journal format. Now, for transferring the net profit, the debit entry is in the profit and loss appropriation account. Let's then write the text DR to indicate that this is a debit entry. Let's then write the corresponding debit amount of 35,000 rupees in the debit amount column. Let's then write the first credit entry into the partner Radha's capital account. Let's then write the corresponding credit amount of 17,500 rupees into the credit amount column. Note here that this is the profit share amount calculated as per the profit sharing ratio. It is not the actual profit. Let's then write the second credit entry into the partner Mary's capital account. Let's then write the corresponding credit amount of 14,000 rupees into the credit amount column. Let's then write the third credit entry into the partner Fatima's capital account. Let's then write the corresponding credit amount of 3,500 rupees into the credit amount column. Note here that this is not guaranteed profit amount. It is the profit share amount calculated as per the profit sharing ratio. Let's then write the description or narration of this transaction as being profit distributed among partners as per their profit sharing ratio. Now, the next step would be to record the entries related to the adjustments for the deficiencies. See, as both the partners Radha and Mary are giving away part of their profit share to contribute to the partner Fatima's guaranteed profit amount, their capitals will be reducing. See, we have already added the profit share to their capital accounts. So, their profit is now part of their capital accounts. That's why I'm saying that their capitals will be reducing. So, as their capital accounts are decreasing, we should debit both Radha's capital account as well as Mary's capital account. At the same time, the capitals reduced from the partners Radha and Mary's capital accounts are added to the partner Fatima's capital account. In other words, partner Fatima's capital account is increasing. So, we should create the partner Fatima's capital account. Let us now proceed with the generalizing of this transaction. Let us first write partner Radha's capital account as the debit entry. Let us then write the text DR to indicate that this is a debit entry. Let us then write the corresponding debit amount of 900 rupees into the debit amount column. Let us then write partner Mary's capital account as the next debit entry. Let us then write the text DR to indicate that this is also a debit entry. Let us then write the corresponding debit amount of 600 rupees into the debit amount column. Leaving a margin, let us write partner Fatima's capital account as the credit entry. Let us then write the corresponding credit amount of 1,500 rupees into the credit amount column. Let us then write the description or narration of this transaction as being deficiency in Fatima's profit contributed by the other partners Radha and Mary. Now, the preparation of the partner's capital account is not in the scope of this problem. So, let us leave out partner's capital account related entries and let us directly post the profit and loss appropriation account related entries into the profit and loss appropriation account. Let's first write the subheader profit transfer in the particulars column on the debit side. Let's then write to Radha's capital account. Let's then write the partner Radha's share in profit calculated as per the profit sharing ratio, which is 17,500 rupees. From this, let us lessen her contribution to the partner Fatima's profit share deficiency from guaranteed amount. This is 900 rupees. Now, from 17,500 rupees, if we subtract 900 rupees, we get 16,600 rupees. Let's write this amount in the amount column. Let's then write to Mary's capital account. Let's then write the partner Mary's share in profit calculated as per the profit sharing ratio, which is 14,000 rupees. From this, let us lessen her contribution to the partner Fatima's profit share deficiency from guaranteed amount. This is 600 rupees. Now, from 14,000 rupees, if we subtract 600 rupees, we get 13,400 rupees. Let's write this amount in the amount column. Let's then write to Fatima's capital account. Let's then write partner Fatima's share in profit calculated as per the profit sharing ratio, which is 3,500 rupees. To this, let us add the deficiencies received from other partners. Now, the contribution to this deficiency by the partner Radha is 900 rupees. The contribution to this deficiency by the partner Mary is 600 rupees. Now, to 3,500 rupees, if we add 900 rupees and 600 rupees, we get 5,000 rupees. Let's write this amount in the amount column. Now, the total on the debit side of the profit and loss appropriation account is 35,000 rupees. Similarly, the total on the credit side of the profit and loss appropriation account is also 35,000 rupees. So, the profit and loss appropriation account is balanced. With that, we have come to the end of the solution to this problem. Thanks for watching. Edixit.com is started to promote effective and efficient learning process to help the students with their learning requirements. To watch all our videos, please subscribe to our channel. Also, please click on the bell icon to receive a notification as soon as a new video is published. Please click on the like button if you like this video. Thanks for watching.